Hello friends, welcome to Kavita's classroom. And let's do our another sample paper of macroeconomics. So here we begin without wasting any more time. The very first question, we know about all these instructions we have already dealt with. So the very first question from section A and macroeconomics is the value of investment multiplier is 5, K is 5, and the relevant saving function would be. We know the relationship that K is equal to 1 by MPS. So the value of investment multiplier is 5. It means MPS becomes 1 by 5. That's equal to 0.2. So what would be the value of 0.2? Just check. We are very much clear. Rest minus 60 is there everywhere. So it's 0.2. Answer is C. The second question is, identify which of the following will not be included in national income. Salary to Indian residents working at Russian embassy in India included. Income from smuggling. Clearly, this is my answer because smuggling means a negative activity which is not in the ambit of national income. Still, let's give us the reading of the following section. Payments to farm workers in the form of food grains, correct. Added. Interest paid by a firm to a bank, added. So this smuggling income will not be added. If an upward sloping straight line consumption function makes an intercept of y at a positive coordinate, it implies that marginal propensity to consume dash and average propensity to consume dash as income increases. We know as the income increases, the general tendency of the people to consume simply keeps on falling. So APC falls with rise in income. So this simply tells that this and this has gone, but false is there. And then they say it is a upward sloping straight line consumption function. So straight line consumption function would always have a constant MPC. It means this is my answer. MPC is constant and APC would fall. Okay. Moving ahead, assertion, reasoning based question. Assertion is other things remaining constant. Devaluation of domestic currency may lead to a rise in the national income of nation. True or false? True. Why? Because we know devaluation will give a boost to exports. And if you remember, exports are a positive component in expenditure method of national income. Right? So when exports are added, it means GDP or national income is added, right? So that's grown. Okay. Now, the devaluation of domestic currency refers to the reduction in the value of domestic currency by the government with respect to the foreign currency under fixed exchange rate regime or system. It's true, but is it the reason? The reason is how I explained why it increases, but this is a true fact and definition of devaluation. So the answer is B. The assertion is true, the reason is true, but reason given is not the right reason for assertion. Next question. Central bank can decrease the money supply in the economy by. So decrease the money supply, right? Means it's a situation of inflation. And in inflation, what do? We try to increase all the rates, reserves, everything, right? So let us check. Lowering, no. Increasing the bank rate, yes, this is going to be the answer. Lowering the bank rate, no. And purchase of government securities, no. Sale. Why purchase is not the right answer? Because if the government or bank purchases something, so as a result, the money goes back to the economy. But we want the money supply to be controlled, not increased. Hence, purchase is not correct here. So our answer is increasing the bank rate. Sixth question says that if total credit created by the banks is 500 and reserve ratio is 20%, the primary deposits would be. So we know the credit creation is the reverse of reserve ratio. So it's 20 by 100, that's equal to 5 times. So credit created is 5 times, right? So total credit is equal to the initial credit, that is X, multiplied by the multiplier. So what would give you here? Dash multiplied by 5 is equal to 500. So that is equal to 100. 100 multiplied by 5 gives you 500, right? So move ahead. Using the given information, complete the following table. And here in this table, we are given income, savings, consumption, and APC. And the first dash is for savings. At zero level of income, when we are consuming 30 and we are not earning, so what is our savings? Our savings are negative 30. It means we are dis-saving because we do not have any income or we are borrowing. Right. And the next blank talks about consumption. When income is 100 and we are not saving anything, it means we are consuming altogether because income is equal to consumption plus saving. So income is 100 and we are told that savings are equal to 0. So C comes out to be 100, right? Okay. So our answer becomes D. Correct. Move ahead. Question number 8 says, identify which of the following is not a source of demand for foreign exchange. Let us see. For imports, we do need foreign exchange, we demand. Gifts by Indians to their families abroad. Yes, we need foreign exchange to buy the gifts. Indian tourists visiting foreign countries. Yes, then they need foreign exchange and loans from the rest of the world. This is my answer. When we are seeking loans from the rest of the world, so foreign exchange would be a supply, not a demand case here, right? So we would get the foreign exchange. Suppose in an economy planned spendings are greater than planned output, means aggregate demand is more than aggregate supply. Output is less and demand is more. They are spending more. Right. Identify the correct things. Decrease in planned inventories in the economy. Yes, because if demand goes up or if spendings go up, then inventories would definitely be going down. This is correct statement. Rise in national income, of course. When there is more flow of income, more production, more demand, more sales, then that would lead to rise in national income. These two are correct. Decrease in real output level in the economy. Why would it decrease? No, it would not decrease. And decrease in employment, why would it be so? Because it's a case of increase in production and production activity. So our answers should be 1 and 2. So this is our answer. Moving ahead, question number 10 says, read the following statements carefully. Statement 1, the price of a given currency in terms of other is known as bank rate. No, that's foreign exchange rate. That's wrong. The demand curve for foreign exchange is a downward sloping curve. Yes, it is downward sloping as it traditionally is. So this is correct. So my answer is first statement is false and second is true. Then we have differentiate between or distinguish between autonomous transactions and accommodating transactions. You have many 4 to 5 reasons, clear reasons. You give any 3. The first is the meaning that autonomous are profit oriented, but this is to bring balance in the economy. These are done by public and private sector. These are done only by public sector. These are done in current and capital account, but these are done only in capital account. These are above the line. These are below the line. Any sale, purchase, export, import is the example. Here it is the fiddling with reserves is the example. So all these, any 3 would fetch you the right marks. Then you have question number 12A part, calculate NDPFC, and we are here given GNP at MP. So GNP MP is given and we need to find NDPFC. So how do we equate? We have to subtract the depreciation from national to domestic. We have to subtract NFIA. From MP to FC, we have to subtract NIT. Okay, so let's do 2500 is this component. Depreciation is consumption of fixed capital, that is 200. We have taken up here. NFIA, net factor income from abroad, is given. So we will write minus 50. Had it been to abroad, we would have changed the sign. And then NIT. So NIT is IT minus subsidies. IT is 20. Subsidies are 50. So NIT becomes minus 30. And when I have to subtract minus 30, it will be added because of this symbol. So what is the net effect? I have to subtract 220 from 2500. So it becomes 220 to be subtracted. So 2280 would be the right answer. These many lakh of rupees. I hope you got the steps. Then you have in the OR section, define net factor income from abroad and discuss its components. There are three clear components which are given clearly in the books, right? NFIA has first component net compensation of employees, net income from property and entrepreneurship, right? And then you have net retained earnings. So explain these three: income, net income from property and entrepreneurship. So these things are to be explained for 1 mark each, and you get to have the answer and full marks. It's just the defining. No, it's explaining and it's discussing as well. So you would say received from abroad minus paid to abroad in every component here. Okay. Now, 13th A part, estimate AD. AD means we know C plus I is AD, right? So let us find, do we have C and I both? So autonomous investment, I is given, good. MPS is given to be 0.2, so MPC becomes 0.8. Level of income is Y 4,000. Autonomous consumption expenditure C bar is given with us. So AD is equal to C bar plus BY plus I, because AD is equal to C plus I, right? So let's put the value. C bar is the last component 50 plus B is what we have found, MPC 0.8 of 4,000. So 4,000 multiplied by 8 divided by 10. 10 goes with 0 goes with 0. This is 3,200. So this is 3,200 plus I, autonomous investment, is 100. So what do I get to have? 3,200, 3,300, 3,350. So the data is in rupees and crores, and that's my answer. The B part says propensity to consume. So it's simply the tendency to consume out of what is earned, the ratio of consumption with respect to income. Then we have 14th question, A part. An economy is operating at underemployment level of income. What does this situation indicate? Underemployment means their AD is less than AS and it is going to deflationary situations. And they say one fiscal measure. Fiscal measure means not the banking, right? Repo rate, reverse repo rate would not be talked about here. Here we'll say tax, subsidies, government expenditure. So here taxes should be reduced, subsidies should be enhanced, or government expenditure should be enhanced if we want to bring back the economy at that same level. Okay. Then you have in OR section, elaborate using a hypothetical example how a given initial increase in investment affects the level of final income of the economy. So it means it's a clear question of investment multiplier. So you do talk about that, say initial increase in investment is some value. Then you talk about this as straight away the income, which would be then consumed and saved. And you talk about the rounds here, round first and second. So first, second, third, fourth rounds. This way you can give this table and you can assume that we are beginning with 100. So you'll stop where delta S comes out to be 100 again. And you can simply talk about what is the tendency of consumption, right? So if MPC, you have to consider two things. Let delta I is say 100, let MPC is say 50% or 0.5, right? So this way you can just show that when 100 units are invested by the government, then this becomes the income of somebody, which is partly saved and partly consumed. And then in the second round, this consumption comes out to be the income of somebody, which would be consumed and saved again. So this way you can just keep on, give the data for 2 to 3 rounds, then show dotted lines in the fourth round, and then you have to give the calculations like what is going to be the investment multiplier. So investment multiplier would be 1 by MPS, and that's equal to 1 by 50%, that is equal to 2 times. So here the change in income would be 2 times. So total income, income generated in the economy would be initial investment multiplied by the value of multiplier, and that is 2 here. So it becomes 2 times rupees and crore, whatever units you want to give. So once more, I want to just revisit all the important points. You have to give what you are assuming here. You have to give the tabular presentation to show the mechanism, and you have to show these two calculations of total income generated and the investment multiplier, how you're going to get. You do put the values that here 100 is consumed, 100 is saved, and 200 is created as the total income because it is total is 200 here. And this fetches you full marks. Question number 15. In 1990, on the advice of RBI, the government of India took a decision of hypothecation of gold reserves to different nations. In the light of above statement, discuss briefly the role of central bank as banker, agent, and advisor. It means you have to talk about these three functions, right? So you may say as a banker, it accepts the deposits, lends, loan, right? So does other banking function, right? Remittances, takes care of remittances, etc. As agent, you may talk about that it works for the public debt and all, right? Advisor, you may say that it advises the government on many economic issues, on the investment issues, right? Investment opportunities which prevail in the economy inside your country or outside your country. So this way you have to discuss about all the three mentioned segments. It's not that any one or two parts would suffice. All the three aspects have to be given for 4 marks, right? Moving ahead. So question number 16 is a case-based study, which is basically of public and private goods. Okay. And you're given like benefits are available to all, for example. So non-rivalrous aspect is made clear here. Okay. And then you're given non-excludable. The second aspect is clear. And then free rider effect, these non-paying users are free rider. Fine. So let's proceed for which questions are given here. Describe how the government's role in providing public goods impact community welfare. Yes, you can talk about the welfare because these are non-rivalrous, non-excludable. So these are given to each and every section of the society, whether they do have the paying capacity or not, because we cannot exclude anyone from using these. Fine. So this promotes the welfare of the people, especially of those who are not in a position to buy on their own. Define free rider and explain the challenge. So all those who do not pay irrespective of their capacity to pay, they are free rider. Because why would somebody be paying for the public goods when these are given free to everyone, right? So this is free rider effect. Non-payment aspect is highlighted here. What are the challenges posed by this? It simply gives a pressure to the Indian treasury, to the government, and government has to create more pool from what? From the tax income, tax revenues. So the common man again is exerted in terms of more taxation, which it pays because government spends out of that pool only for these public goods. The last question, but it has got so many questions. Let us proceed further. So in this question, we see it's a question based on product method where form A, B, C, and D are being talked about, and sales and purchase data is mentioned here. So let's proceed. Let's create the table here for form A, B, and C, and we have sales, we have purchases, right? There is no mention of change in stock. So out of this, from sales, when we subtract purchases, so that is the value addition happened, right? We'll give the date of value addition here, right? So form A sells goods worth rupees 2000 to B. So it's the sales of A and purchases of B. Then 1200 to form C. So it's the sales of A and purchases of B, right? Purchases of C. Now, second statement, form B sold goods worth rupees 1100 to A. So this becomes the sales data for B, but purchases data for A. And 3500 to C. So 3500 here, but 3500 of sales for B. Now, for C, it is form C sold to household for final consumption goods worth rupees 5700. So it is 5700 which is sold, right? So if we just check it out, what is the formula of GVA? GVA is GVO minus IC. So GVO is sales at change in stock. Change in stock is not there. So sales minus purchases or IC will give the value of GVA, right? So let us do out of 3200, when 1100 are subtracted, we would have 2100 here, right? Out of 4600, when 2000 are subtracted, so this becomes 26, okay? Out of 5700, when 35, 36, 37, 4700 are subtracted, this becomes 1000. So what is the net value going to be? It is 0, 0, 6 and 1, 7, and 2 plus 2 plus 1 is 5. So my answer is 5700. So this is the GVA, 5700 crore rupees, or crore units are not given, it's only rupees. So we will mention only rupees. This is the GDP, right? So, but what do they want? They want NDP at MP, assuming depreciation is 120. So let's utilize this area. We need to find NDP at MP, and we have GDP at MP. So what do we do? Minus depreciation, and depreciation is 120, right? So we would subtract 5700 minus 120. So 0 out of 10, we have 8 here, and this is coming out to be, oh no. Yes, 6 minus 1, this is 5, and this is again 5. So 5550 rupees is going to be my last answer. Please make sure that this is the common problem with the students. Students subtract this 120 from all these three separately. No, the GVA is this 5700 figure, and 120 would be subtracted just once, right? Because this is for the whole value given. Okay. Explain the likely impact of construction of 2000 new schools, providing high quality education for GDP and welfare. So for GDP, of course, with the construction of schools, it's a construction activity, right? So goods, and what is GDP? The value of goods and services produced in the economy. So for school, we would be making the school building, furniture, books, everything would be produced more and more. So it will give a clear boost to GDP. And when they say welfare, welfare would definitely be there because it's going to increase the employment opportunities. It's going to give the quality education to the people, which would open up the horizons for the students. Long-term effects are going to be good, right? So they would be, with education, they get to know about health, education, the importance of every virtue of their life, right? So it is going to create a positive impact in terms of welfare also. Now, the or segment says the difference between the distinguish between real GDP and nominal GDP. So it's a clear question. You can talk about that this is adjusted against inflation. It is not adjusted against inflation. This is good indicator to measure the success of some nation, right? This is an eye wash, right? So this is not really the dependable measure to check the GDP of any nation. Right. You can give the formula that conversion is used by use of GDP deflator, nominal income by real income into 100, or you can give the connect that you can find nominal GDP from real GDP through this formula, or real GDP from nominal GDP through this formula. Okay. And then the last question is electric vehicle sales crossed 1 million mark in this. Analyze the impact on GDP and economic welfare. So it's very much clear again here that because the production is happening for cars, so GDP talks about the production of goods and services in the economy. So GDP would definitely rise because it will give opportunities and employment opportunities, flow of goods and services to masses, right? And when you talk about economic welfare is definitely there because here we are saying electric cars and it's giving a clear green picture here. So it's going to make the environment pollution free. Our economy would be pollution free. Hence, this is going to give a positive impact on welfare, right? So here we are done with this sample paper discussion. See you next in another paper. Till then, see ya. Goodbye.